who's ready to dive into some market trends, mortgage insights, as well as some of the things that we are seeing in your local real estate market for the month of February? I know I am. Hey, everybody, Tim Weigel here, Watson Realty, coming to deliver you the fabulous data for the month of February 2025 locally. So, and we got some good stuff that we're going to talk about today. But before we go, please, if you haven't already, like, subscribe to my channel, leave comments. Would love to hear from you. Get your insights to see what you feel about this data. All right, let's get it rolling. And trust me, this is going to be a doozy. While we get started, one thing I got to say is I was talking to a past client earlier today, and they're asking me, how's the real estate market? And you talk to some agents, and they're going to tell you that it's a buyer's market. You talk to others, and they're going to go ahead and tell you it's a seller's market. The best way I could tell you about today's market is it's a wonky market. It's not a bad market for sellers. It's also not a bad market for buyers. Okay, it's kind of like in between. And as we go through the data, I'm going to share it with you. Slight adjustments one way or another is going to swing the pendulum, but overall, we're still looking good. And it's not anything that you should be fearful of. And if you don't believe me, look at the data locally and then tell me that if I'm right or wrong. So starting off, we got Casselberry. So February 2025, 30 units sold compared to 39 last year. Now keep in mind, February last year, 29 days compared to 28 as it was a leap year. So they did have one extra day. Homes, though, are lasting 63 days on market compared to 22 last year. Home prices, though, for the month of February this year, 370 is the median sales price compared to 329. And then we're about the same on cash deals from 11 versus 12. So, but as you can tell, days on market, things are sitting longer, 3 times long in the city of Casselberry. Now let's go ahead and jump on over to Longwood. 46 units sold compared to 61. We're 14 days longer on market than we were last year. However, median sales price jumped up $68,000 and cash deals, though, still staying about the same. All right, moving along to Oviedo. So with Oviedo, 53 units sold compared to 60, so we are 7 less. But days on market, it's only 4 days, so it's still moving pretty fast in the city of Oviedo. Median sales price, however, 526.5 this year compared to 466.408 last year. And cash deals went from 11 to 20, so almost doubled there. So I guess you could say, with looking at some of this data, the secret's out. Oviedo's a great place to live and raise your family, and everyone wants in. All right, Winter Park. 79 units sold in February compared to 92 last year. 37 days on the market compared to 29. Now, median sales price went from 480 to 504. And then cash deals, we were at 51 last year and we dropped down to 43 this year. All right, moving to Winter Springs. 49 units sold. So this is the first area that actually sold more units this year than last year. Days on market is 41 compared to 38 last year. So that's creeping up slightly, but median sales price went from 404 to 415, and then the cash deal stayed the same. The one thing I can say about Winter Springs is the fourth quarter of last year in Winter Springs was very stagnant. Not much activity, if any. I saw homes sitting for almost the entire November, December. But once we got 2 weeks into January, things started moving. Now we got the Orlando area. So 628 sold units this year compared to 795 last year. 53 days on market compared to 28, so that almost doubled. As far as median sales price, we went from 389.9 to 400. And the cash deals, though, from last year we had 267, now dropped down to 206. So gives you a good idea of where the market's going. Okay. People are always saying, oh, it's definitely not a good market. Well, from a seller's perspective, the prices are still going up. They're just not going up at the pace that we saw during the pandemic. Okay. However, it is taking a little longer for the homes to sell. Now, as a seller, if you jump on the first offer, without fully looking at it, vetting it, you might be making a mistake. But homes are still going relatively quick. You just got to pay attention to the market. All right, so let's talk about some of the top sold homes. So coming in at number 5, highest sold for the month of February, it's out in Isleworth for 4.35 million, and it was on the market for 250 days. Coming in number 4 for 5.1 million in Bayshore Estates, also out there in Windermere area, 265 days. 5.2 million in Reserve at Lake Butler Sound, out there near Windermere, 4 days. Now we have a home, and believe it or not, it's a home, not a townhome, in Morrison, Pennsylvania, townhomes, 6.975 in 32789, so Winter Park, 120 days. And then our friend Golden Oak that seemed to take care of the top 5, 3 of the top 5 last in January, 8.25 million in Golden Oak, which is out there 32836. It's the Disney development. Now, saw this today on LinkedIn from somebody who's involved with Resi Club. And this chart is provided by Lance Lambert from Federal Housing Finance Agency. And I thought it was cool data that really lets you know where some of our inventory issues are coming from. And it comes down to mortgage rates. As you tell over here, so 73.3% of the US mortgage borrowers have an interest rate under 5%. So here to there, 73%. So with that, for most of them, because they're under 5%, why are they going to sell their home unless they have to go ahead and take on a mortgage rate that is anywhere between 6.5 and 7% right now? 1.5%, just to give you an idea. So let's just say you buy a $500,000 home times 1.5%. That's going to end up increasing your monthly payment by about $625 potentially. So that's a big jump there. So that's just something to think about on there. But this is one of the reasons that we're having an issue. And it's also probably one of the reasons why the rates are still going up. So you got people that don't have to sell, have the lower interest rates, so they're going to stay at their lower interest rate. Therefore, it keeps homes off the market. If homes are off the market, inventory is low. If inventory is low, supply and demand, it's going to drive the price right up. That's an important thing to think of. Now, what's still going to happen is whether your interest rate is low or not, life happens. You either have to downsize, there could be a death in the family, maybe a divorce. There's a lot of things that could impact. You get married, diamonds, for example. I think it's like 5 or 7, what they call the Ds, that are situations that will happen to you. That's going to make you end up reevaluating your home situation. And regardless of interest rate, you're going to look at selling. One other thing to think of, though, is if you are seriously thinking of selling, this is where consults, whether it's with a lender or a realtor, is important, because we can talk through different options and strategies for you. You can always read what you want to read online, but it doesn't mean that you're going to get the right answer for your specific situation. While sitting down with me or some other professional will get you the right answer. Now, let's talk a little bit about some of my takeaways. So as you can tell from the data locally, we are selling less homes locally. The only city that sold a little bit more was Winter Springs, and they didn't sell by a lot. And even if you take out the fact that you had one extra day, doesn't matter. We're still below, because one day is not going to make that big of a difference. So we are still in a seller's market based off data, but it really does feel like a buyer's market. Showings are down, open houses are down, online traffic is off the chart though. Which also kind of tells me that I think things are about to change. I'm not sure what direction we are. If interest rates go back up to 7, 8% or something like that, we're definitely going to be swinging more of the pendulum towards the buyer's market. If interest rates dip down into the 4s, hold on to your seats. We're going to be going. But also the other thing to point out, which is kind of why I say we're in a wonky market, because everyone says, oh, buyers can negotiate, buyers can negotiate. But look at that. Median sales price, which granted, it's all preliminary, all stuff pulled out of the MLS. There's a lot of other factors that go into it. And also being that we're only a few days into March, some of the data might change based off updates, adjustments, things that haven't been counted yet, but it shouldn't swing it by a lot. This also doesn't take off market listings like FSBOs for sell by owners. But what it does tell us is median sales price is still going up. So if buyers are really negotiating so much more, why is the price still going up? Because of the inventory. So it's still good for sellers. Sellers are still making money. It's just not at the fastest pace that they were hoping. Truthfully, and not everyone's going to agree with this, but this is a great opportunity for home ownership. So if you're looking to buy, whether it's an investment, your first home, or even upgrade homes, now's the time. You could do it, you can get it on a good deal, and you can make it work. If you sit on the sidelines, you might miss out on your opportunity to own home ownership. And if you ask anyone, home ownership is the #1 key to driving wealth for you and your family. So this is a great opportunity for you. I'd be lying if I said it wouldn't be stressful. It will be. It always is. But these are the situations that can make it or break it for 20, 30, 40 years down the road. So definitely, if you have any questions, feel free to reach out. But it's a great opportunity for you. And like always, feel free, connect with me. I'm always here for you. And I hope this information works for you. Have a good day.